Good morning, everybody. Hello, my name is Mike. I'm the head of partnerships here at AVASK, and I'm delighted to be presenting the first presentation with my two colleagues, Cambridge and Jacob. Cambridge is one of our indirect tax consultants, and Jacob is our senior customs and EPR manager. And the first session that we're going to be discussing is all about keeping up with the legislation. So that is going to be talking about growing and upscaling your e-commerce business in 2022 and beyond. So yes, I'd like to just introduce Jacob and Cambridge now. So hello.
Hi, Mike. Hi. And it's good to be part of this Tame Live session. I'm hoping that everyone gets a lot of good content, and yeah, that this is really useful for everyone.
Okay.
Good morning, everyone.
Hi, Cambridge. How are you today? You all right?
I'm good, thank you. I'm good. I'm excited to be online today.
Oh, that's absolutely perfect. Thank you. So, yes, 2022 is set to become another busy year for e-commerce sellers. And in this session, AVASK are going to be leading a thought-provoking discussion about how digital entrepreneurs can maximize their expansion opportunities throughout the year. We're going to be covering some newly implemented EU legislation, including EPR, the French import VAT reverse charge scheme, changes to Intrastat reporting, and the continuing challenges of Brexit. Jacob and Cambridge, I'd like to start first and asking you to just, do we have a little bit of a roundup of what's been happening over the last 12 months and where we are with the state of e-commerce?
Yeah, I think from my point of view, obviously the start of like the changes that happened was going to be beginning of 2021. Obviously that big word Brexit, and how it affected e-commerce sellers. I think like both myself and Cambridge will be able to give a view on that. And it significantly affected people. Obviously, it's the UK leaving the European Union, and although it's over a year already it's still affecting people. And it's not just UK businesses, it's all businesses, EU businesses, UK businesses, but also businesses from the US, from China, Australia, India, etc. Just because there was that real connection, especially when you're selling on, say, Amazon, you're using like the pan-European FBA network. It's really kind of like shock to the system, essentially, Brexit did. So I think it's massively affected everyone.
Oh, brilliant. Okay. And obviously, how did people overcome the issues that were caused by Brexit?
Yeah, I think I'll jump in first, if that's right with you, Cambridge, and then I can let you give your view earlier. So myself, I work in the customs department, so I'm managing the customs department. So I think that's kind of one of the first areas we're looking at. I mean, if we take an example that you've got a UK-based business who used to use pan-European FBA. So for anyone who doesn't know what pan-European FBA is, it's an Amazon kind of fulfillment program where it used to be UK, Germany, France, Italy, Spain, Poland, and the Czech Republic. You used to send your stock to one location and Amazon used to distribute it, and it was nice and easy. Everyone needed the VAT numbers where everyone had their stock located, but Amazon distributed the stock. But because of Brexit, there was no movement of stock between the UK and the EU, which is obviously only one country coming out of that 7-country portfolio. But the problem was that most people, I say most people, if you're based in Germany, if you're based in France, if you're based in kind of a European country, you're not part of this network I'm talking about. But most people, as in UK sellers, US sellers, Chinese sellers, Australian sellers, they would use the UK as the main hub. So suddenly all of the stock that they used to send into the UK is now just staying in the UK. It doesn't get distributed to those other networks. So now they've got to figure out, okay, I've got to get my products into the EU directly. So do I bring it into the UK, then transfer it across, or do I go direct from source? So there was lots of complications around that. And I think another one of the main things to touch on is that UK customs, from my point of view, is generally quite I wouldn't say lenient, but not quite as strict to say when you're going directly into Germany. So I think it was a bit of shock for people when suddenly they started trying to ship products to Germany, think it's going to work exactly the same as how it did in the UK, and suddenly things get stuck in the border when that wouldn't have happened the prior year. I don't know, Cambridge, if you've got anything to add there. What have you been seeing from your side?
Yeah, I think from a compliance point of view, we've seen a lot of change. We spent the whole year before Brexit was finalised kind of worrying about what was going to hit us come the 1st of January. But it turned out to be not quite as dramatic as we were expecting, some kind of cataclysmic end. But yeah, so what we were seeing is that moving forward, obviously with the implementation of kind of a more US-based model for Amazon and OMPs, that where they were then collecting and remitting on behalf of non-UK based entities, that we were then moving towards more of a kind of a higher box 6 figure, if you're familiar with the UK VAT return, and a minimal box 5 figure. So the actual VAT that our VAT registered clients had to pay was becoming quite minimal, whereas their turnover was still quite high. And then that meant that when bringing goods into the UK, there was a lot more reclaim to be had. And obviously with that, if you're reclaiming any funds from a tax office, the tax office get a little bit cagey about that, to say the least. They get a little bit sceptical, which did mean that we saw an increase in tax audits. So for some of our audience, we might have seen that, you know, you saw these truce investigations coming out from HMRC, and what that basically is HMRC's way of going, we see that you've put in for this large amount of import VAT back. We can see that you provided the evidence. We just want to double check that, which obviously for a client's point of view can be a quite scary time when any tax office is auditing your account. But it is nothing to be scared of. They just want to make sure that the import VAT that you're declaring that you've paid, they have actually received those funds so that they can give them back to you, and so that you can see, so that they can see, the sales that account towards that import VAT, so that you've actually sold all those items that you're bringing into the country. That's kind of the main transition we saw because of Brexit. And then moving forward, obviously, we did have some of the customs issues that Jacob touched on. We saw that a lot of freight forwarders were starting to kind of combine shipments as well, which meant that reclaiming was a little bit more difficult for each of our clients. But then obviously we tried to push a lot more with our clients for the UK PVA, so postponed VAT accounting, which meant that you didn't have to pay out at the border. Instead, you got what's called a chief statement from your CDS account, which basically says, I would have had to have paid all of this upon entry into the UK, but actually I'm just going to offset it in my VAT return like you would your normal import VAT, but instead it becomes a paper transaction, which for a lot of clients that are VAT registered became kind of a real benefit in terms of cash flow. So I would say from my point of view, Mike, those are the two things that I've kind of seen on my side that's come from Brexit. And I can't say that either of them are particularly bad. It just means that in terms of our clients, they don't have to send so much money to different jurisdictions, which obviously has a knock-on effect with bank fees, etc. So I would say, if anything, a lot of benefit there.
Just to quickly touch on what you've been saying there as well, Cambridge, if I can. So with the postponed VAT accounting, just so people kind of aren't aware of how it would actually be processed, whoever's doing your customs declaration in the UK, they need to be the one that processes it through postponed VAT accounting. So on the customs declaration, you need to essentially select a certain box which allows it to be postponed. So it would still say there's 20,000 of import VAT, for example, but instead of it being paid upfront now, it's going to be postponed. And as Cambridge said, you get those statements from HMRC, so you can then offset it within your VAT return.
Okay, brilliant. Thank you very much. We have had a question just come in on the chat at the moment. So this one comes from Kalogari Sferaza. I think I've pronounced that correctly. 95% of Customs Authority control reveal uncompliance for inbounds in from China. How do we deal with under-evaluation from Chinese shippers?
Yeah, I mean, yeah, bit of a difficult question, to be honest. I mean, as a customs broker, we act as what's called an indirect representative in a lot of cases. So for a foreign business, if they're importing into the UK, in AVASK, we're doing the customs declaration, we would be acting as the indirect representative, which essentially means we're jointly liable for the information within the declaration and jointly liable for any customs debt or liability. So we're very diligent with making sure information is correct, so that people are providing the correct values. And if we're not happy with correct correct values, we wouldn't do a declaration for someone. Obviously, I can't speak for what other people are doing, and I think it comes back to the UK not being as strict as other jurisdictions, which I think realistically is unfortunate, and for some people it gives unfair advantages, because I've seen it in the past. Things are getting undervalued, and there's been declarations where things have been imported under different details that they should have been imported, and that's caused lots of issues for our clients. We've had people who have paid import VAT, they've paid however many thousands of import VAT, and the customs declaration is not done properly because it's not done by an agent who really is worried about the information that's there. So as someone who deals with VAT, customs, compliance, we ensure that everything that we deal with is correct and how it should be. But yeah, it's hard for us to comment on other companies. And hopefully, kind of as time goes on, I think what we've seen across like e-commerce is that compliance is catching up, essentially. So there's all these new rules and regulations that people are being told about, and everyone thinks, okay, these are new things, but a lot of them aren't necessarily new. They're just being enforced more. So hopefully that gets extended to more kind of customs issues, and that 95% can come down to 0% eventually, but at least it can start coming down in portions at a time.
Okay, that's absolutely brilliant. Thanks for answering that question there, Jacob. With regards to the direct and indirect representation, is that what can e-commerce sellers do to be better prepared for trading across borders in Europe?
Yeah, so I mean, to be better prepared, I think it really depends. Like it's for like the UK as an example, and the EU really, there's never going to be, or there isn't at the moment, full consistency. So you can try and import a product to Germany, and it might get stuck, and you need to appoint an indirect representative. And then someone goes and imports a product to France, and they didn't have to do that. Now, what an indirect representative is someone who's taken on joint and several liability for customs, as I've mentioned. If you look into like legislation, if you look into the UK as an example, HMRC state that every non-UK importer, so if you're a business from the US, if you're a business from China, even if you're from the EU, you need indirect representation. But it's the responsibility of the person who's completing the declaration. So in our case, that would be AVASK, but obviously other freight forwarders, other customs brokers, they do it. And they're not all necessarily doing it in that way. And the same happens in other countries. There's not loads of consistency, but what I would recommend is ensuring kind of whichever avenue you decide to go down, whether it's kind of courier shipments directly into, say, France, or whether it's containers directly into Germany or containers into the Netherlands, where you've kind of assessed and you make sure that you discuss with whoever's doing the declaration that I'm a foreign business, or I might not be a foreign business. Do you have all the information to provide? Are you going to be able to provide me with the customs declaration so I can reclaim my import VAT? I would kind of cover all bases, because I think what we've seen is people go ahead, like, for example, freight forwarders, they'll go ahead, they'll want to get the freight money because people are paying for that, and they'll get an agent to do the customs declaration, and it's not necessarily been communicated properly, or documentation hasn't been checked, and then suddenly something happens with the customs declaration and a VAT number is left off the declaration, or an EORI number. And then I think, Cambridge, you can add here, people haven't been able to get back import VAT, and suddenly you've paid 20% based on the value of your consignment, and that 20% is not reclaimable. All your margin's gone. So Cambridge, I don't know if you want to add there.
That's definitely what we've been seeing in some circumstances on our end. It is very frustrating for the trader and also ourselves when we can see that some of the documents haven't necessarily been processed correctly, because we are aware that when you are paying VAT at the border for imports, that's a massive chunk out of your cash flow. And as Jacob said, if you're not getting that back, or if we're having to have back and forward between your tax agent, yourself, your freight forwarder, all these parties involved, it can really elongate the process of getting your import VAT back, not to mention the already quite lengthy time periods that the tax offices in Europe are taking to refund import VAT. If you guys are aware, some countries are taking quite stringent measures in Europe, obviously excluding the UK, to refund that money. We're seeing, sometimes France 6 months to refund import VAT, because they are very strict on having particular documentation to ensure that those funds can get returned back to you. And then obviously if the initial documents, which, kind of triggering the import VAT reclaim, are incorrect, that does add yet another layer. And we're just conscious that in terms of cash flow, if you're paying out 20,000 euros at the border, that's 20,000 euros that your company doesn't have, but you will have had to have paid your VAT returns potentially within that time as well. So you've then double paid and you're having to wait for funds to come back. So it really is imperative that those documents are correct the first time. And I know some freight forwarders are a little bit not quite so accurate in terms of their declarations, but it is something that can be resolved. Like never think that it's irreversible. There's always amendments that can be made, appeals to the tax office, etc. There's always options that are available, as long as we can prove that there is that output that you or input rather as input that you made.
Just to add on that as well, Cambridge, I think kind of that's the beauty of having someone who deals with both VAT as well as can help you with customs, because we can give the advice for, okay, right, look to import into this country because it's going to be more efficient when it comes to customs processes. Also, import VAT, it's either you've got options to postpone it, or we know the tax office is fairly good at kind of paying you back essentially. And for example, like we can look at other countries. I've got people who are looking to import directly into Poland, and we try and say, don't import to Poland because it's basically, well, not impossible, but it's very hard to get the import VAT back. So you can kind of get that structured advice, which obviously a freight forwarder wouldn't be able to do. So most of the time they might be able to do the declaration for you with an agent, but they might not be able to give you that structured VAT advice, which is going to help in the long run and make sure that everything's done properly, processed properly. You're not paying import VAT that you are not going to get back.
Definitely, and I think also adding on to that as well, the journey doesn't always stop once your goods are in Europe. From a VAT point of view, for example, if you're bringing goods in via the Netherlands that are then destined for other countries within Europe, and you are reclaiming your import VAT in the Netherlands, then the Netherlands tax office like to see evidence of where those goods have gone. Just to show that the onward flow, as they like to call it in all of their communications, that's their phrase, the onward flow of goods. So they like to see evidence of that. But not only that, also your Intrastat requirements. So your the data that the tax offices need to show where your goods are moving across Europe, because whilst it is a free zone once it's in, you do still have to declare how much is where and when it's moved, in conjunction with your VAT filings as well. So I think that it's really important to point out that the journey of compliance once goods are in the country doesn't necessarily stop there.
Okay, that's great. And thank you so much for answering that, guys. Moving on ever so slightly. So we've covered the effects from Brexit, and we then go on to middle of the year, where we have the introduction of the European e-commerce VAT package, which is obviously also known as OSS and IOSS. So Cambridge, what exactly happened in July 21?
Oh, that is the question, isn't it? 2021 was definitely a year of the VAT changes. I think the amount of times I said the word Brexit, OSS and IOSS during that period, if I had £1 for every time, I'd be a rich woman right now. So yeah, the kind of IOSS and OSS system kind of mimicked what the UK brought in earlier in the year to some extent. Obviously, the whole kind of concept was constructed when the UK was part of the EU, and therefore the kind of principles are roughly the same. And basically what it means is that there's now a centralised way of declaring VAT in Europe. You have got Amazon and other OMPs acting as the deemed supplier for non-EU based companies, which obviously has mitigated the need for, on most occasions, for a lot of e-commerce sellers to actually send money to the tax office. But I would point out that's kind of the only real difference in terms of administration on that side of things. The traders still need to have VAT registrations where they are holding stock. They still need to submit local returns where they are, again, with their VAT registrations. And what those local returns will now look like is actually the value of the transactions between themselves and Amazon. So Amazon has become the, I say Amazon as an overarching example of an OMP. It can be replaced with eBay, etc. But for purposes of, it's the most popular one, so I'll keep it that way. For the purposes of so yeah, our clients are then transacting with Amazon, who is then transacting with the end consumer. I think that's the easiest way to kind of explain it. And within these transactions, what is actually happening is that our client is selling goods to Amazon or an OMP, and they're actually declared at 0%. So the actual trade is still there. You know, that the funds have exchanged hands, as it were, meaning that then Amazon is the one sending the goods across the border, transacting with the end consumer, thus triggering that OSS liability. So what they'll then do is declare that transaction on their OSS return. I would hate to see the size of their OSS return. I'm sure they've got a whole army of people to complete it. But yeah, that's kind of how the operation is for non-EU based companies at the moment. For EU based companies, Amazon isn't acting as that intermediary, or an OMP isn't, which means that the EU based company is still liable for any cross-border transactions. So they will be the ones who register for OSS, and they will declare that in their local country of incorporation.
Just to quickly add and ask a question, if I can, Cambridge, going back to a non-EU based seller. Obviously, I know that we've mentioned Amazon or online marketplaces are the ones responsible for collecting and remitting VAT. So you still have the price the same, you still include it with VAT, but they deduct it and they pay it to the authorities on your behalf. But what I've had a lot of the time speaking to sellers, it's like, okay, well, we don't need a VAT number anymore, which is obviously not true, because you still need the VAT number where you stock. And then it's like, okay, well, we'll just submit nil filings, but it's not really, although it's kind of, you wouldn't necessarily be paying anything, because this is if you're only selling on Amazon. Within the VAT return, you're still going to have all of the individual transactions, which are then zero rated to Amazon as with domestic supplies. So I think that's quite a common misconception, is people think, okay, my VAT return is going to be nil. There's nothing in there. So whoever's doing it is not really doing anything. They're just filing kind of nil returns. You still have to report all of the sales you're making. So the authorities could still go and look into a VAT return and say, okay, this person's done 50,000 worth of sales, but their liability, because it was through an online marketplace, is zero.
Exactly. It is still really important. Whilst for the purposes of VAT registered entities that aren't based in Europe, yes, the actual amount payable might be nil, but that doesn't mean the whole return is nil. As you say, there is still that monetary value of the transactions that have actually been made. The difference is that they've been made with Amazon, which has meant that they're at 0%. So they are still taxable, which I think is something that a terminology which we find quite strange when something is 0%. It is still taxed, but it's still taxed at zero. Which is a very strange concept, but that's kind of how to think about it. If you're thinking a nil return is just all zero, so absolutely no activity, and one of the OSS return for a non-EU based company isn't necessarily, they just submit their local returns with that monetary figure, the amount payable is nil.
Yeah, and just on that as well, sorry to interrupt again.
Yeah,
I think like from my perspective, a lot of people have said that, okay, well, if I still need the VAT numbers, then how's it really actually benefited, and how's this new system actually making it more efficient? So first of all, you've got less payments, so people don't have to make as many payments. If you're a UK business, obviously having to pay in euros, it can sometimes be a hassle. You get bank charges. If you're a US business, obviously you're paying in euros and potentially pounds, so you're not going to have to do that anymore. Obviously, we're talking solely online marketplaces, not if you're including other kind of like transactions. But so it is more efficient as well. With the setup prior to the changes, we had distance selling thresholds. So if you were selling, say, into a country where Amazon doesn't have storage, so for example, Austria, there was a threshold of 35,000 euros. And if you breach that threshold, you would then have to register for VAT in Austria, declare VAT returns in Austria, which, because of this new scheme, someone in that situation wouldn't now have to do it unless they were storing separately there outside of Amazon. So I think, like, a lot of people haven't thought of it as a benefit, but it definitely, for a lot of sellers, it has made it more efficient and lessen their requirements when it comes to like VAT compliance.
Definitely. It removes the need for VAT numbers where you're not storing goods. So that's, if you think from it as a kind of cost versus outlay, if you weren't holding stock in that country, then you were paying for a compliance service for something which you breached into it. And now that you don't have to do that, you're saving however much your tax agent would charge you for that additional filing. And again, you don't have to pay extortionate bank fees to transfer in different currencies. So it does have its benefits, as Jacob says. There are two caveats, unfortunately, to this beautiful system that they thought up. OSS only covers B2C transactions. It doesn't cover B2B. So if you are selling to a business in Europe, then that will still go on your local VAT return, and there may be VAT applicable depending on whether there's a non-domestic reverse charge rule implemented in that particular country. In addition, that, as Jacob mentioned, the previous example was stating that you were only selling on an OMP. It doesn't mitigate the fact that if you are selling on your own website or a Shopify, for example, that you will then have to register for OSS if you're doing cross-border transactions. For example, if you have a website that is purely, France, fulfilled only to France, that would still go in your local French return. But if you had your own website that had fulfillment from France to other European countries, that would trigger an OSS obligation. So those are the two caveats to really keep in mind for OSS. And obviously OSS encompasses goods that are already within Europe. And then we have IOSS, which encompasses goods that are not held in Europe at the time of sale. So that means like any third country, mainly I see for myself, it is the US, the UK, and possibly China. There's a few examples of that in my portfolio. And then we have the rule in terms of value of the goods. If your goods are below 150 euros, so the actual value of the item itself, and being sent into Europe, and you are selling on an OMP, the OMP will collect and remit the VAT for you at the point of sale. So that's the point at which a transaction occurs. They will take responsibility of that. They will take ownership of that good, and they will bring it in to your consumer, listing their IOSS number on the entry document. Absolutely beautiful setup. If you're not selling on an OMP and you are shipping from a non-EU location into the EU, then you will need to register for IOSS, because there still needs to be that IOSS number on the declaration when the good is coming into the country. And it does mean that you have to collect the VAT portion at the point of sale and then remit that in your IOSS return. And your IOSS return covers all EU countries. So what that basically means is it kind of replicates the UK example that they brought in earlier in the year, just means that now it's applicable in Europe as well. It does really streamline things. Instead of previously, if you sold into a EU jurisdiction from outside and you were the importer of record, you would have automatically triggered a VAT obligation in that country, which then again, the administrative cost of registration, the administrative cost of compliance really does kind of outweigh this lovely one-stop shop system. So it really does, streamline things a lot more.
Quickly jump in from my perspective, like working with customs and like seeing people ship and like work with couriers, and some people might have had these issues already, is that I think IOSS, especially when it comes to the changes last year in July, not quite everyone was ready. So not necessarily all countries were ready for the IOSS system. So there were certain countries that weren't accepting the shipment, and there were certain couriers which weren't processing it properly. So we have had cases, and I've seen cases where someone's provided an IOSS number and then the customer's still been charged for import VAT, which is annoying for people, but hopefully those kind of situations get reduced as much as possible as time goes on, because people get used to the new system. And also just to kind of let people know why the 150 euro rule is there, is because 150 euros is kind of the break between having to pay duty and not having to pay duty. So €150 is the duty threshold. So, for example, if you're importing a product that has 5% duty, and if the value of that product is below 150, so a B2C sale that's below 150, there's no duty applicable. But if it's above 150, there is duty applicable, which is hence why they've put that rule in place.
Okay, I've just got a couple of questions that are coming in, if I may. Tim has asked, how important are HS codes, export and import codes being correct in regards to OSS and IOSS?
So, yeah, I can jump in here. So, yeah, they're very important. So they're very important for imports and exports, and you need to make sure they are correct, because that's gonna depend on the amount of duty that would be paid. So one code could have 0% and another code could have 10%. And if customs want to audit an account and they can see you've used the wrong code, essentially you're going to have fines. They can go back a certain amount of time, depending on the country. It can be 10 years. They can look at records, and if you've been providing the wrong code for 10 years, then you're going to have a lot of liability. And also a lot of suppliers, they'll provide codes and then they might not be correct. So although you look at it and you go, okay, they've already been given to me, it must be correct, I would still ensure that you've looked into it, because it can be quite easily misconcepted, because a lot of codes, they might be similar, products might be similar, but depending on materials, percentages, they might fall into different codes. So yeah, they're very, very important, and for every export and every import there needs to be the HS codes.
Okay,
from a VAT compliance point of view as well, just to jump in there, most people think that HS codes kind of stop at the kind of customs element of things. So, for example, in Germany, if you are stating that your goods are subject to a reduced rate of VAT, you do get the occasional check-in from the German tax office that says, can you confirm the HS code that you bought these goods in under? Because then that will define the VAT rate that is applicable on the sale of those items. So it's really important to make sure that you are bringing in at the same on the HS code that would be applicable to the VAT rate of the item. For example, you're not bringing it in under something that would traditionally be 19% in Germany, and then claiming that actually the VAT due on this is 7%. The tax office, safe to say, will not appreciate that.
Perfect. Okay, thank you. So just I suppose the last question on OSS and IOSS is there anything else you'd like to say regarding how it's affected the clients that AVASK have been dealing with, and what has their response been?
From a VAT point of view, I think it's definitely made filing in Europe a lot easier for the vast majority of clients. It's a lot more user-friendly, I would say, especially with the removal of distance selling thresholds, etc. Actually looking at the data on paper is a lot more, it's a lot easier to understand. You can see who's responsible for the remittance of VAT on each item. On the vast majority of reports, for example, the Amazon report has a lovely column right at the end that either says seller or marketplace, lovely laid out. And it's also meant that because there's not so many kind of transactions happening in a month in terms of actually the clients sending money to the tax office, their actual accounting is a lot easier to keep track of. The only difference would be is that odds are they're bound to be incurring a lot more import VAT back because they're not having so much VAT to offset it against. But that still does mean that it's a lot more streamlined. They can see what they're due back. They don't have random currency exchange rate issues with funds that are going out, which means that different monies come back to the bank account. It's a lot easier. And as you say, most of the returns, there's nothing for the client to pay anyway. So it's, for them, it's a weight off their shoulders.
So in effect, OSS and IOSS is making Europe a much more attractive place to conduct e-commerce business then? Definitely.
They've definitely got the streamlining just right.
Oh, that's perfect to know. Okay, bringing it up to January 2022, I understand there's a new piece of legislation that's just come into force called Extended Producer Responsibility, or EPR. Can you tell me what has changed with regards to EPR? Because I know it's been EPR was originally invented in the 1980s. So what's the update there?
Yeah, I can jump in here. Thanks, Mike. So,
Thanks, Jacob.
yeah, extended producer responsibility. It's probably going to be a new concept to a lot of people, and people might have already received some information from Amazon, some emails from other marketplaces talking about EPR, and they're going to be thinking, what is that? So yeah, as you said, it's been around for quite a while, and it's being adopted by more and more countries as time goes on. So extended producer responsibility is essentially, I wouldn't like to necessarily call it a tax, but it's going to be contributions to ensuring kind of a circular economy. Now, what I mean by a circular economy is like e-commerce, and not even just e-commerce, retail. There's a lot of waste. There's a lot of products that come in, they go out, they go into landfill. So the whole point of extended producer responsibility is to try and circulate the economy, and things that are going in are kind of circulating back around. So what I mean by that is going into recycled materials. Those recycled materials are then sold. Now, the problem at the moment for a lot of countries is that there's an imbalance. So, for example, producing recycled materials from the products, i.e. packaging as an example, and getting it to another product that can then be sold. So sold recycled material, it costs more than it does to produce, if that makes sense. So you're kind of trying to level the playing field. So essentially what extended producer responsibility is there to do is to make people who are putting products onto the market, so manufacturers, sellers, producers, etc., making them responsible for contributing. So what's happening within Europe, and especially for e-commerce, is it's being introduced in Germany and France. So in France, you've got a list of different categories. So your product could fall into multiple different categories. And what you would have to do is then register for an EPR number, and you would need to contribute towards what's called an eco-organism. So there's different eco-organisms for different categories, and essentially you would need to pay your contributions. Now, the contributions are going to depend on exactly what you're selling. So for example, you've got packaging, you've got like electronic and electrical equipment, you've got batteries. So there's loads of different categories. Most people, from speaking to people, they fall into packaging, and that would be the only one they fall into. But then obviously if you've got electrical equipment, you might fall into that category. And essentially you need to register for EPR numbers, pay contributions based on the amount of that product. So it's done based on weight, for an example, that you then put into the market, and your contributions will be based on that. So essentially it's a small contribution, but everyone would need to do it if they fall into that category. Now, what's happening with, say, Amazon is at the moment, France had deadlines for the 1st of January 2022 for everyone to be registered. But there's a bit more of a lenient approach to France. And at the moment, Amazon are covering people. I'm not too sure what's happening with all the other marketplaces. That's going to depend. But if we're talking specifically about Amazon, they are covering people for a period. But you will have to get an EPR number, and you need to show that you are going to be registering for EPR. So you are going to need to get that. So you'd have to review, see which categories you fall into, register for EPR for those particular categories, and pay your contributions. And then you've got Germany. So Germany, the deadlines for the first ones for packaging is in July 2022, so this year, so not that long. And that's going to be a much stricter deadline when it comes to Amazon. If you don't have the EPR number uploaded to your Amazon account, it could affect selling. So you potentially could get products delisted because they're not compliant with EPR regulations. And then you've got next year, you've got January 2023, things like electrical equipment and batteries getting introduced. So anyone who's selling on Amazon, you're definitely going to have packaging, because even if you don't put your product in your own packaging, you then have secondary packaging, which is what Amazon put it into. So you need to pay contributions for the secondary packaging. So you'd have to have a review of the products. We at AVASK can do that for you. We can tell you which categories you fit into, which EPR numbers you're going to do, and then we can register you.
Okay, that sounds great. I'm actually quite astounded by this as well, because I've been reading through the legislation as it's been coming in. And if you take something as simple as, those flashing Christmas jumpers, for example, it's breathtaking to think that in France you'd need to do packaging because the jumper's going to come in a plastic bag, textiles because it's made out of material. Then you're also going to have electrical circuitry because it's got lights in it, and batteries because it's got obviously a battery to make it flash. That's absolutely crazy. The amount of registrations on one item would be 4. So you're saying that AVASK can help you with the registration on that. Is that correct?
Yeah, so we can help you with all the registrations and make sure you're prepared, basically, because obviously we've got deadlines. It's all come very quick. Obviously, a lot of the focus last year was Brexit, and with France, it's been a bit more, okay, we're going to cover it for you. I was talking about Amazon for this period of time, but you are eventually going to need your own numbers. But for Germany, it's not going to be that case. And you've got however many months it is until July, 6-7 months, to get your registration numbers. And essentially the whole point of EPR is to, as I said, create that circular economy, make people be more like efficient with the packaging they're using, and trying to get rid of packaging that's just coming in, going out, going into landfill. Now, we're talking about Germany and France. I would expect this to be widespread. So you're likely over the next however many years see it go to other countries. So for example, the UK. The UK is going to introduce EPR, but it's going to be a bit more specific to certain not certain types of sellers. Essentially, they've got a plastic waste tax coming in, which is going to be for people who produce a certain amount of plastic. It's going to be like 10 tons, I believe. Don't quote me on that. 10 tons within a year. So a lot of people selling on e-commerce, and they're not going to produce that much. So it might not apply to them. But I can only expect that eventually it's going to apply to a lot more people. More regulations are going to be brought in. So I would expect to see it across the marketplace you're selling. And this is not just Europe, potentially US, potentially Australia, Japan, all of those places, because I think like environmentally, we do have to get better. And I think everyone can agree with that. And it's only the way the world's going to go. We're going to have to be more efficient and become a bit more circular.
Absolutely, and I think as resources are being maxed out and we're all becoming much more eco-focused, I think it's absolutely brilliant that the governments are starting to bring in legislation to enable people to start reusing more and to stop creating so much primary plastics and rely on secondary reusable plastics, which I think is absolutely fantastic. Okay, so we're just coming up to time now on this session. So I'd just like to ask, what is the number one takeaway you would like to give? So I'll start with Jacob and then on to Cambridge. What's the number one takeaway you'd like people to take away from this session, please?
Yeah, so from my perspective, I think like the last year and even now, there's a lot of changes going on, and there's a lot of like different things happening which might confuse people. And with like Brexit, for example, a lot of people pulled out. But I would say there's still so much business to be had, like in terms of e-commerce, selling in Europe, selling in the UK. There's so many consumers which you can get your products to. Like you can have someone who's dealing with all of these regulations for you. And realistically, there's going to be more solutions moving forward. So Amazon, they're going to put more resources into different solutions. Okay, if it's going to be cross-border, I think the one quick thing to mention as well is that the reintroduction of the European fulfillment network, so cross-border transactions between the UK and the EU for B2C. So a lot of people might have received an email about that already. So look out for that. There's going to be certain rules and regulations around it, but essentially, what I would say is don't give up on Europe and the UK because of these different regulations. There's still so much business to be had.
Absolutely, yes. I think 717 billion was the last figure I saw, and that's a pretty impressive pot to be a part of.
Yeah, definitely.
Okay, thank you. And Cambridge, from yourself, from a compliance perspective, what is the number one takeaway that people need to take away from this session, please?
I would say, first off, much like Jacob, like don't be scared. Don't be scared of change. Change is actually a benefit, as we've discussed. Ask for help, reach out. If you're unsure, that's what AVASK is here for. We are here to give you guidance and kind of hold your hand through making sure that you are compliant with every obligation that you have within the UK and Europe. And we will offer options such as PVA, and other custom solutions as well, to kind of even ease you getting your stock into that before you even think of starting to sell. So really, we will help you in your journey. Just reach us and then we can start the relationship there.
Absolutely. And PVA is the postponed VAT accounting, isn't it?
Yeah, that's the one.
Okay, and something changed in France at the beginning of the year for postponed VAT accounting, or was that?
It did, yeah. So it's now compulsory in France at PVA. So it means for any imports that are coming into France, now you will not pay import VAT at the border. You'll simply offset it onto your VAT return. We still need all the relevant documentation that you usually send So your import entry documents, but you won't be shelling out any cash at the border. Massive benefit. Don't be scared of it. I would recommend using France as kind of the gateway into Europe now. I would say France and Netherlands are probably your best importing options into Europe from a compliance point of view. So definitely, if you're a AVASK client or if you're interested in French PVA, do reach out to us. We can give you some advice on how to optimize that and make sure that you aren't paying over the odds for import VAT that you might be waiting 6 months to get back down the line.
Oh, that's absolutely perfect. Thank you very much, Cambridge. Okay, so finally, if anybody has any questions regarding anything that's been discussed here today, we would, of course, encourage everybody to get in touch with AVASK today to get those questions answered. You can email us at inquiries@avaskgroup.com. And we've just also thrown up an extra slide about the services that AVASK can help you with. So we can cover things additionally like e-commerce, accounting and bookkeeping. Obviously, as we've mentioned, we can do all the UK EU customs brokerage solutions, VAT, and we can also provide additional resources when you're looking to grow and expand your e-commerce business outside of Europe as well. So do get in contact with us. We're here to help and support. My name is Mike. I'm the head of partnerships. You've been also talking to Cambridge, who's our indirect tax consultant and team leader, and Jacob McQuoid, the senior customs and EPR manager. So thank you very much, Jacob and Cambridge, for joining me today. It's been absolutely brilliant hosting you. Yes, so thank you.
Thank you very much, Mike.
Okay. That's perfect. Okay, so I think we're going to be taking a short break now. I think there's going to be an extra 15 minutes to take advantage of. So do please take some time to visit the supplier showcases or meet with your fellow attendees. I think Jacob's available to answer any questions. You can book meetings through the AVASK showcase as well if you require anything. And yes, we look forward to seeing you very shortly for the next session, which will be with Amazon. So that's Oscar from Amazon. So thanks very much, everybody. Thanks, Jacob. Thanks, Cambridge.